Hello traders, and welcome to my 5th candlestick trading video. So again, today we are going to be looking at individual candlesticks and multiple candlesticks and judging price's direction based on those candlesticks. The difference today, what we're going to do is look more at volume and also Fibonacci retracements. In the past, in the first, I think, 3 videos that I did on this series, we just looked at candlesticks to judge direction. Then we added volume, and now we're going to add volume and Fibonacci's. And I believe that trading off of candlesticks with Fibonacci's and volume is a perfect strategy and really one that can generate a good amount of profit. So I'm going to show you guys how to do that today, and we'll get started. So again, the first thing you want to do is just recognize these patterns. A lot of them are going to come up today. And then also, we do have a bit of candlesticks that resemble these, from most bearish to least bearish and most bullish to least bullish. You probably want to look at this for a bit, and then we're going to get started. Okay. So for our first example, we have a strong downtrend. We see this downtrend go all the way down to 176, pulls up a bit, and then we have this. So first of all, I want you guys to tell me what these two candlesticks are, and then the price's direction based on the volume and these candlesticks. Let me give you guys 5 seconds. Okay, so if you had said this is a bullish pin bar and this is a bullish engulfing candle, then you would be correct. The one we have here is also the least bearish candlestick that you can have, where we have a low tail and a high close. And then we also have the most bullish candle possible, which is the engulfing bullish candle. So already we know that this is a very strong setup for buying here at 181. And we also can see that if we look at the average volume, this is a 5 volume weighted average. We know that both these candlesticks are above the moving average. So it'd be likely that price is going to go upward. Now let's go to our next example. So if you were here and you saw this, would you sell or would you stay in your position? I'm going to draw a Fibonacci retracement, and we will discuss what to do after. So again, what type of candle is this? You might want to look at the support and resistance of this setup too, and what to do to buy or sell based on this information. I'll give you guys 5 seconds. Okay, so yes, this is a slight bearish engulfing candle, but what had happened was that a tail had gone down to the 50% retracement right down here to this previous resistance level. And I've made previous videos talking about how to trade off of previous resistance levels, how to put buy orders there, so that when the price climbs right back down, you get a perfect buy order that takes you right upward. And we can see that price was unable to close even below 38.2% of this pattern. So you can infer that this is actually quite bullish because of the retracements. Yes, in a perfect world, you would have bought here and then sold here and then rebought here at the resistance level, because that would make the most sense. But that would be quite hard to do without 2020 hindsight. And also, there is significant selling volume here. But what you have to note with looking at volume is that this is not just all selling. This is selling and buying. So a lot of sellers and buyers fought, and we can see that these sellers were winning at the beginning of the fight, and then the buyers pushed price right back up from the 50% and above the 38.2. So just looking at some Fibonacci's and seeing where this touches on the support and resistance, you could probably infer that you want to hold your position. You would close your position if it dropped below this resistance level down to here for a tiny, tiny profit. And you'd risk that tiny, tiny profit of a loss for a gigantic gain like this. So now if we come to here, we see another pattern that looks quite bearish. So again, if you were in this spot, would you hold your position, or would you add more, or would you exit? I'm going to give you guys 10 seconds to guess this 3 candlestick formation and what you would do. Okay, so if you had said this was the evening star formation, which I'm going to flip to right now. If you had said this was the 3 candlestick evening doji star position, you'd be correct. But if we look at the volume here, it's quite telling. We know that there's a significant amount of bullish volume, which could either be an overbought sign where price can probably go down, or it can be a sign that the bulls are in control. It depends on the situation. And then we can see that there's a weak bearish candle here and then an even weaker bearish candle here. And with this volume trending downward, as you can see with this evening star formation, you probably don't want to add more to your position. You might want to exit, but in reality, this is what happened. Price actually continued to go upward. And what you might have done is when you see this sell and then rebuy when resistance is hit, which when the previous resistance becomes future support, which is right here, as you can see. But this is a little tricky, to be honest. But you can also see that price didn't even retrace past the 38.2, which is a pretty good sign that price is going to continue going upward. So now, for the final part of this, let's look at this formation right here. So if you were here, would you buy, sell? What would you do based on looking at the volume? Okay, so basically what we have here is many weak bullish bars. If we look back here, we can see that these are the least bullish bars. We had seen the least bearish bars down here, and now we're seeing very weak bullish bars right here. And we also see a bit of dark cloud cover here, which is another candlestick formation. And also, this high was not broken of 210, as they share about the same high. And we can see that there's also a bearish engulfing candle. So this would probably be a selling stage that you want to get out of. Now again, if you see that this candle stops here at the previous resistance point and then goes up, you might want to buy. But in this time, it went up a bit and then it continued to go down and then it went much lower, as you can see. It more stalled. It didn't go a lot lower, but it stalled. You probably wouldn't want to be in your position with movement like that. But the bottom line is, when you're looking at an uptrend and you're buying and selling as part of that uptrend, as a day trader should, for trying to get a perfect profit or maximize the amount of profit you can get, you always want to look at average volume and comparing that volume of that candlestick to that average volume. Also, we went over volume trends. As you can see, the volume here was trending downward. You can see that right here, and that's a pretty bullish sign because that shows that the bears aren't really in control here. It's more the bulls. We can see that here. And then you can see that this changed as high bullish volume here, yes, but that was a bit overbought. And then we had the bears take over with volume here. And that's what created this. And again, you always want to look at the Fibonacci's as well for the third component of this video. The first being candlesticks. Always look at the candlesticks first, then the volume, and then look at the Fibonacci's. And you can even see here that if we had drawn a Fibonacci from 176 to 210, it seems to be that around the 61.8 is where price actually went up again. So if you were a savvy trader, you get out here, you wait for this to cool out and to hit your 61.8 position. Or you could also buy at the 50% because you see this previous support, and you probably could have gotten filled here. But if you bought it around 190-ish, you know where that 61.8 is, then you would have caught this, and you would have caught a very nice uptrend. So again, that's going to be it for today's video. You always want to compare important candlesticks against their volume, like right here, and also where they are in the Fibonacci sequence, as this one's at the 61.8, just about. And this one actually touches it. This one's just about there, and you have a bullish engulfing with great volume. And places like this and places like this are fantastic spots to buy. If you have any questions about the candlesticks themselves, the volume, or if you have any questions about the Fibonacci's, I'd be happy to answer them in the comments. Thanks for watching.